Okay, dear FR students, let us discuss section B, pre-scene mock, and the last question. We have already discussed section A completely. We have already discussed the previous two questions of section B as well. In today's, I would say, small lecture, we'll be discussing just the last question of section B, FR pre-scene mock, March 2026. While we'll be discussing that question, I will also be highlighting where students they usually make mistakes and what are the reasons that students they are not even performing a really good in that area which is supposed to be, I would say, very easy. So I highlights the area where students they are usually making mistakes. So let me share the question. Student, this is, you can see that what we have discussed in our previous lecture. Now let us discuss the last question of this ACCA section B of ACCA pre-scene mock FR March 2026. This question is on EPS IAS 33. What is the basic EPS of VIX for the year ended 31st December X5 in accordance with IAS 33? We are required to calculate EPS, and the name of the organization is VIX basic EPS. Okay. We know that IAS 33, the formula is very simple: profit after tax minus the preference dividend, which you are paying to the irredeemable preference shareholders, divided by weighted average number of ordinary shares. That simply gives you the basic EPS. Year end is December X5. VEX, Flex, Hex, Rex, so many companies listed. Okay. VEX is here. Just a minute, little bit zoom in. Shares in issue. You can see that there are shares in issue. 30 million shares they are in issue of VEX. Profit after income tax for the year ended December X5 is 12.5 million. They have given us the shares which VEX has issued. Simply, you can say opening number of shares at 30 million. The profit of X after deducting interest of 4 lakh in relation to 6% convertible loan notes. No conversion took place during their. During their VEX paid dividends 600,000 in relation to irredeemable preference shares classified as equity. So I would say it's as easy as ABC is very easy. Generally, we normally we do not expect such an easy question, but examiner has asked here. Basic EPS, VEX organization. Profit after tax is, I'm ignoring 3 zeros for the sake of simplicity, 12,500. Dividend paid is 6 lakh. I'm taking just 600. Number of shares company is having 30 million. Other than that, they have not issued any shares. If at the start of the year I have got 30 million shares and during there company has not issued any shares, then obviously all the shares which I had at the start, they will become these are my now weighted average ordinary shares. They will work as weighted average ordinary shares. I'm taking 30,000. 12,500 minus 600 gives me 11,900 divided by 30,000. Students, I'm getting dollar 0.39667. So let's make it 0.397. If you do not get the exact answer, then go to the closest one. So obviously 0.397, the closest is alpha. 0.40. Now, where students they make mistake in such an easy question, instead of focusing on a company for which the examiner is asking this part, they start looking at and reading the data of other organizations as well. Then you just get confused. Don't do that. Just stick to that particular company for which examiner is asking you to calculate EPS. Then obviously chances of making mistakes are very less. What number of shares should be used in the calculation of basic EPS of Flex for the year ended December X5? It's a Flex name of a company. It's not what you were thinking. What number of shares should be used in the calculation of basic EPS? Simply, we are required to calculate weighted average ordinary shares for Flex company. Opening shares, I can see here 4 million. Year end is December X5. Don't forget. Flex made a fully subscribed 144 right issue. Now stop. Students, under IS 33, whenever your examiner gives you right issue, or in any question, if you have right issues under IS 33, then in case of right issue, first you have to calculate the theory. You are required to you should be calculating, in fact, first theoretical X right price, then adjustment factor. How do we calculate adjustment factor? Simply the share price before right divided by theoretical X right price gives you adjustment factor, and that adjustment factor is applied on all those shares which you have in the question before the right issue. Okay. Flex made a fully subscribed 144 right issue in October X5 at a price of 2. The fair value one ordinary shares immediately before right was 4.5. So let us first calculate theoretical X right price means share price after the right issue. Then we'll calculate the adjustment factor, and that adjustment factor will be applied only on those shares which are before the right. For calculating theoretical X right price, actually theoretical X right price means share price after the right issue. You have to just make 3 columns: shares, values, and total value. Ratio says 4 existing shares, 1 right. Share price before right is 4.5 and the right issue price is $2. Simply multiply them. 4 multiplied by 4.5 gives us 18. Here I'm getting 2. So we can say that 5 shares are having total value 20. Students, if 5 shares they are having total value 20, so obviously you can very easily calculate the average share price. If 5 shares they are having total value 20, if I ask you what is the average value of one share, so simply what we will be doing it, 20 divided by 5. This is theoretical X right price. Theoretical X right price means share price after the right issue. I'm getting 4. Adjustment factor. Adjustment factor. Simply we'll take the share price before right issue divided by theoretical X right price, and this adjustment factor is applied only on those shares they are before the right. Again, I'm ignoring 3 zeros to make it simple. Before the right, we have got 4,000 shares. Don't forget, we are ignoring 3 zeros. Students, before right, we have got 3,000 shares. I'm just telling you, we are ignoring 3 zeros. Multiply by the time factor. Adjustment factor is 4.5 upon 4. Time factor. Now look at this. Students, we have got 4 million shares, or you can say 4,000 shares. Okay. Look at the date of right. The date of right is on right was issued on 1st October X5. So it means from if you count the time period, then 9 months. It means 4,009 upon 12 time factor. We are taking number of shares, time factor, then adjustment factor. Adjustment factor is applied only on those shares they are there before the right. And why did I take 9 months? Because right issue was made on 1st October. Had it was issued on 31st October, we would have taken 10 months. Year end is this 31st December, and right was issued on 1st October. So obviously 9 months. From 1st January till 1st October, the time period 9 months. So you can say after 9 months, company has issued the right issue. Students, I'm getting 3375. Now we'll take the shares after the right issue. Before right, we have got 4,000 shares. Now, how many right shares companies has issued? Right issue. Before right, we have got 4,000 shares and the ratio of right is 1 upon 4. So logically, company has issued 1000 right shares. Repeat, before right, we have got 4000 shares and the ratio is 1 upon 4. It means company has issued 1000 right shares, which means that shares after right, we have got 5000. So shares after right, we have 5000 shares. From 1st October till 31st December, we have 5000 shares because in between 1st October X5 till 31st October 31st December X5, there is no transaction. Company has not issued any other shares. So 5003 by 12, I'm taking 1250. That will give us the weighted average number of ordinary shares, 4625, and don't forget 3 zeros. So the weighted average shares are 462530. The answer is delta. What we did, we saw right issues there. We first calculated theoretical X right price, then adjustment factor, and then we took the number of shares, multiplied by the time factor, then into adjustment factor. After that, we calculated the shares after right issue and into time factor. Now, obviously, whoever makes mistakes in theoretical X right price, so definitely you will end up by making mistake error in the rest of the calculation as well. What is the diluted EPS? Students, if you recall, we know that diluted EPS is an assumption value. While calculating diluted EPS, actually we assume that all the potential ordinary shares, if they become ordinary in day one, what will be the EPS? That is called diluted EPS. The objective of calculating the diluted EPS is just to show the dark side of the business. Okay. What is the diluted EPS of Rex? Look at the company. Every time examiner is the new requirement is coming and the new company is coming. Okay. What is the diluted EPS of Rex for the year ended December X5? Take into account the potential conversion effect of the options. It is categorically mentioned. Take the impact of option, and the name of the company is Rex. And we are required to calculate diluted EPS. Rex is already having 8 million shares. Now Rex. On January X5, Rex issued 2 million shares with an exercise price is $3. The average market of Rex ordinary share during there was 4. Students, in case of share option, first you are required to calculate, you should be calculating shares for nil consideration. Let us first calculate shares for nil consideration. Share for nil consideration. Again, I'm ignoring 3 zeros just for the sake of simplicity. Total number of share options, there are 2 million. I'm taking 2000 into. Divided by average market price, which is 4. Now, we are calculating shares for nil consideration. Now, listen. Average market price is $4 and the exercise price is 3. How much we are not charging? $1 we are not charging. Repeat. Average market value of the share is $4 and exercise price is $3. How much we are not charging? $1. So that will gives you. I'm getting 500. So shares for nil consideration, they are 500. Okay. Already in Rex, we have opening 8 million shares, means 8,000. So 8,000 plus 500 gives us 8,500. So for calculating diluted EPS, we'll be using 8,500 shares. Profit after income tax of Rex is 2380,000. Here comes the diluted EPS. 2380, I'm again ignoring 3 zeros, divided by 8,500. 2380 divided by 8,500. Students, I'm getting $0.28. So the diluted EPS is 0.28. Wow. Simply, I would say, wow. Okay. What is the diluted EPS of? This time it is hex for the year ended December X5, taking into account the potential Conversion effect of the convertible loan note. Again, diluted EPS, but the company is changed. This time, what was the name of a company? Hex. Hex already having 6 million shares. Profit after tax 1.62 million. On January X5, start of there, issued 3 million loan note at par. The interest expense recognized in the profit and loss relating to these loan note is 2,25,000. The interest they have recognized is 225. Each $100 loan note is convertible into 40 ordinary shares. At the end of X9, pays corporation tax 20%. Now, some of the students, they just make mistake. How? They just try to find out what is the interest rate percentage. You are not required to calculate interest rate percentage. Your examiner has given you the interest which they have charged on these convertible loan note to your P&L. You just need that interest amount which is given to you. So whenever convertible loan note, we convert that into, when we take that into diluted EPS, of course, we make an assumption that convertible loan note has been converted into ordinary shares in day one. So obviously the interest which we were supposed to pay, which came into the P&L, now obviously we're not going to pay. That interest will be saved. And due to that interest savings, earnings will increase. Obviously, profitability will also increase. So first step is we need to calculate revised PAT. So let us calculate. Existing earnings they have given us, existing profit after tax is 1620. Again, I'm ignoring 3 zeros. Student, you are just supposed to add interest saving after tax. Interest saving after tax. The amount of the interest is 225. Multiply by 1 minus tax rate. Tax rate is 0.2. So 225 into 0.8, 180. That will give us the revised PAT. Students, revised PAT is, this is revised earnings, revised PAT. In diluted EPS, obviously, we'll be using revised profit after tax. Already, we have got ordinary number of ordinary shares. How many? 6 million means 6,000. Now, simply add shares due to conversion. Add shares due to conversion. Add shares due to conversion. They have given you the ratio. Loan note is $3 million. Each $100 loan note is convertible into 40 ordinary shares. So 3 million, I'm taking 3,000. 40 ordinary shares per 100 loan note. I'm getting 1,200. That gives me 7,200. So weighted average shares for diluted EPS here will be using 7,200. Here comes your diluted EPS. Revised earnings are 1,800 divided by 7,200. Let's see what I'm getting. Students, I'm getting $0.25. Wow. $0.25. I just want to say one thing. If you have seen all of my regular lectures, so definitely I can guarantee this question will not disturb you at all. Obviously, if you have not revised, then it's something else. But normally, whoever has seen all the regular classes shouldn't be having any problem in this question. Last question, okay. For equity shareholders, trends in basic EPS is more reliable indicator of underlying performance than trends in the net profit. So equity holders, they are saying trend in basic EPS is more important than the trend in profit, okay. Which of the following correctly explains why this is the case? Why this is the case? Basic EPS is not affected by management's choice of accounting policies, which net profit is false. When accounting policy changes, it affects the profit. Obviously, it will affect the EPS as well. Basic EPS per share incorporates the additional resources made available to earn profit when the new shares are issued, which net profit does not. That is true. When we calculate basic EPS, we exactly know that. I think just if you go maybe 2 questions back, there was a right issue. Obviously, when company makes a right issue, they raise finance. Exactly, it was issued on 1st October, means after the 9 months. Then what was the price? We know that. How many right issues company made, how much company raised the finance, we know that. So when we are calculating basic EPS, we exactly know that when organization made the cash issue. Basic EPS incorporates the additional resources made available to earn profit when the new shares are issued for cash, which net profit does not, of course. But looking at net profit, you cannot say that how much company has raised the finance. But when you are calculating basic EPS, weighted average ordinary shares, so exactly you know that when organization has made XYZ transactions to raise the cash. Basic EPS provides a forward-looking. No, basic cannot provide any forward-looking. Basic EPS is directly linked to the company's dividend payments, making it a superior indicator of come on. So students, that is all about section B. And the last question, previous 2 questions we have already done in the previous class. Now I would recommend kindly attempt the section C questions. And of course, my WhatsApp support is available to all of my enrolled students to the last day of your exam. And don't forget one thing, students, obviously those that are watching this lecture on YouTube, Abil School of Accountancy's FR lectures, each lecture is hardly 35 to 40 minutes long, not more than that. Within just 50 to 55, or within I would say 50 hours, you can complete the entire FR. And then you'll be spending around 10 to 12 hours for the practice videos. Plus, we do not only provide detailed notes to our FR students, we do provide them the short notes as well. And with the help of those short notes, our student can revise the entire FR just within 2 to 3 hours. Plus, FR support, which Abil School of Accountancy provides you, it is the best and fastest in the world. Plus, our lectures are unique, easy to understand. One more point, whenever you will be asking the queries at Abil School of Accountancy, teachers, they directly reply to the students. We don't keep any teacher assistant to answer the queries. Why? Basically, if I have taught something, then I strongly believe that I'm in a better position to explain to my students what they are asking rather than someone else. So we don't keep teacher assistants. Other places you will find teacher assistant to answer your queries, and that at the end of the day you will mess up. Here, the lectures are concise, to the point, plus they're not very long, and you're not getting only detailed notes, you're getting the short notes as well. So that is all about us. Thank you very much.